So in this video, I'm going to look at price gaps and stock prices. And this is actually important for finding profitability in small amounts of time and short spaces of time. And I'm actually going to use a Google Sheet that I created to help analyze these gaps and give you a few examples of stocks for that. But first of all, I'd like to explain more about price gaps. Now, by the way, I have another video where I went over intraday variation in general, which is basically the distance between prices at different points in the day or different points in the week. So you can see that video if you need a little more background. But right now, I'm going to go ahead and explain what this is about here in this video. Okay, so now basically, when I talk about price gaps inside of a trading day, okay, let's look, for instance, let's just go to something particularly well known like Apple. Okay, so at 9:30 a.m., this was the open price of 147.73. Okay, that was the open. This was the high price of $150.80. The low price was of course, the lowest price that we had of the day, 145.86. And then the close is the price at 4 o'clock p.m. when the market officially closes at 146.62. This, what we see here, is considered after hours, after 4 o'clock, between 4 and 8. Here's after hours on Robinhood. And we have 7 a.m. Before 9:30 a.m., 7 a.m. to 9:30 a.m. That is the pre-market, so I'm not talking about that. Okay, I'm talking about the actual trading day, 9:30 a.m. to 4 p.m. All right, so just want to make that clear, first of all. Now, inside of a trading day, you have the low to high gap, you have the open to high. This is the distance between those different points. Okay, so for instance, the open to high gap in this case would be the price when Apple opened here at 9:30 compared to how high it went at its highest point. So the distance between those, this is the open and this is the high, that is your open to high gap. Okay, that is how it works. You then have an open to low gap. It's the same idea. You're going to take the distance from when it first opened versus how low it went, its lowest point. Okay, and the distance between those two numbers. All right, I'm not calculating or anything right now because I'm just explaining just visually. Right, I just want you to actually see what this is. Right, this is the lowest point, and this was where it started. So it's how far apart those two, the numbers are. Okay, 148.97 versus 145.86. Okay, that distance. All right, so that's basically what these are. Right, then you have open to close, the beginning compared to the ending. You have the low to close, the lowest point compared to the end point, and then high to close would be like the highest point compared to the end point. All right, that's inside of the day. However, we can also look between different days. Now, looking between different days is going to be more tricky to do just with the chart because this is only showing one day. But even if I look at 1 week, right, then I have to think about the different days. As you can see, it's showing me the different dates and the times, right? So that's a lot to kind of do visually, and that is really where the Google Sheet comes in really handy. Okay, I created this Google Sheet which actually can look inside in between different days of the week for you, and it can do it over an extended long period of time and tell you what happened between those points. So like between trading days, for instance, really it could be there are way more possibilities between trading days because it could be any point on one day to any point on the other. Now this chart, let's take a look at this kind of diagram, I would say, that I made to kind of help give a little visual on this, right? So for instance, if I'm looking at open to open, okay, I'm not going over all these, but just kind of pointing out what they are, right? That would mean open, for instance, on Monday compared to the open on Tuesday, right? I can compare these two. That's a price, and that's a price gap. And I can say, well, how far apart were these two. Okay, Monday compared to Tuesday. That's a price gap, right? You can also do low to low. So basically, the same point to the same point, open to open, low to low, high to high, close to close. Just comparing the same thing to the same thing, right? That point to its same point on a different day, right? And close to close. Okay, you can compare them like that, right? And I wanted to make these the same color, right? Okay, so you can do that as well. I'm going to make this green as well, just so we can really see that they are the same thing, right? Now, but then you also have gaps that are actually different points on different days, like close to open, close to low, close to high, right? So on this diagram, that would be like the close here compared to the open over here, or the close over here compared to the high up here, or the close over here compared to the low here, right? And this is actually the most common thing, okay, that is compared. And let me show you how that translates, okay, here, right? When you are looking at a trading day, as you move through the day, you have what's called the percent change, right? That percentage that you see in the parentheses up there. That percentage is actually the gap between yesterday's or the previous trading day, which is usually yesterday, but it could also be Friday to Monday. The previous trading day's closing price. Okay, so it's like, how much higher am I now than the previous trading day close price when it closed at 4? Or how much lower am I when I drop down and I become negative, okay, below this line? So you see this line in the middle. Okay, these are the negative percent change. Okay, this is when I went below yesterday's closing price. Okay, so you see those negative percentages, and you see this positive percentages when you're above yesterday's close. So these, that's what these are. Okay, close to low, for instance, would be that percentage that is shown you when you get to the bottom. Okay, the lowest point. I believe this would be the lowest point. Okay, yesterday's close compared to the low on this day was minus 1.32%. Okay, so the close to low today for Apple was minus 1.32%. That's the yesterday's closing price compared to today's low for this particular stock. Okay, that gap is minus 1.32%. However, the closing price compared to the highest point of Apple today, the highest point was 2.02%. That was the close to high. Okay, that's the close to high. All right, remember I'm talking about the between days. So this close here is previous close. Okay, I could even put the word previous in here to make it more clear. So we're talking about the previous close, yesterday's close to today's high. Okay, that's a gap. Okay, and so on and so forth. You could come up with any combinations that you can come up with between those the 4 points of each day. All right, I can take any two of these and compare them. I can take anything from here and compare it to anything else I want to over here. Right, that's something I can do. Okay. Now, what I would like to do at this point, just kind of given that background understanding of the gaps and what we're looking at, let's take a look at an actual stock. For instance, this one, Gevo. This is a penny stock, right? I can open the chart on my Google Sheet, and I can see today's chart. This was today's chart, right? You can see it's a penny stock, very low price. And let's talk about some of the gaps. Now, for one, I've already, when you type in the symbol, you then put an amount of time. Okay, I'm going to put 365. Okay, let me go back. Oops. Okay, I'm going to type in 365. I didn't have number lock on. And it's looking at the past year. So I already have the gaps in here. Okay, I already have. So first of all, when I put 365 days, it pulls in the data. Okay, it pulls in all the data for the past year. Okay, that is what this does. All the dates, the open prices, the lows, the highs, and the close prices, all the way down for the past year. All right, the latest dates at the bottom, earliest dates at the top. All right, the Excel formulas I entered figures out the day of the week. So you also have Monday, Tuesday, Wednesday, so you can see what day it is. And I already have certain gaps in here. Okay, being calculated on each day. Okay, so that low percent change I talked about, that's the close to the close. Okay, let's take a look at this just so I want to make sure we understand what everything is. This close to close, that's what that is. Okay, this low percent change, that's this close compared to this low. Right? Between any 2 days. It doesn't have to be Monday, Tuesday. It could be Tuesday, Wednesday. Close to that low. Okay, so on and so forth. So you see the gaps. Okay, you see the high percent change. Okay, that's the close to high. Right? And this is showing you, calculating for you, the distance as a percentage between these different points inside. Okay, these are intraday, inside of the day. And what it's showing you is how much money you really can be making inside of a day by trading these things. Okay, look at the low to high gap, 14.66. Look at the open to high gap, 8.26 on that particular day. Or let's even look at some more recent ones. You see some large numbers down here as well. Okay, so even in more recent times, right, this is where it ends, you see some pretty large numbers, positive numbers here, and that's how much profit you could have made. Open to high, 8.26% over here. So you could have bought this at the open, sold it at the high, and made an 8.26% return. Okay, so these are gaps. Okay, open to close gap, open to low gap, all these different gaps. So that's inside of a day. And then you have the averages up here if you want. So you can see, like, on average, first of all, maybe I could have started here. On average, how large does this particular stock, how large is it? Is the gap between the open and high? Okay, the open to high gap. The gap, okay, the space between here and here, between that open price and the high price, or as I showed on a chart, between this open and this high, how far apart were they? Okay, on average, 3.82%. Okay, so that just gives you an idea. Okay, but what this part does, this is the day of the week. This is what really makes this Google Sheet do something different. Okay, as I used, I would say advanced Excel formulas to actually draw out the prices based on the day of the week and the points that you choose. So if we want to compare Monday's close to Tuesday's close, you can actually just select Monday's close, Tuesday's close. All right, and it's actually pulling all the prices of Monday, closing prices, and then it's pulling all the closing prices the day after Monday, which is usually Tuesday, but sometimes it's a holiday and it's Wednesday. But usually that's going to be Tuesday, okay? So the day after, it's giving you that closing price. And then it's calculating with the formula, right? Simple subtraction division. The percent change, the gap, this is the gap between those 2 points. So we can actually see how Monday's close compares to Tuesday's close from week to week. Okay, and we can see sometimes it was 7.77% apart, 2.5, but sometimes it was negative, right, -6. Okay, so we see that. Okay, and sometimes it's highly positive as well. And so you can see those, that variety, quite a variety here. Somewhat of a variety, okay, of numbers, but we do see, considering that it's a short space of time, being 1 day, some pretty significant large numbers for that short time. Okay, so that's basically what this does. Now, to summarize things, it's telling you the average of all of these numbers down here. You know, how do they average out? But as you can see, the average doesn't tell me much by itself. Just looking at the average is no good. You have to actually look at the numbers, because just the average is 1.85%, but then I see like 7 here, right? 0.77, 3.56. I see much bigger numbers, or even much smaller, like -6, much lower numbers, right? So the average is not good enough. Okay, we need to actually look and get an idea of what can happen here, okay, or what has happened. This is the gain frequency. This is telling you how often did the price go up from the Monday close price to the Tuesday's closing price. So how often was this price over here bigger than that, okay, than the Monday's closing price? How often did it go up? How often did it go down? And it's telling you it went up 56.52% of the time, more than half of the time. So that's good. And actually, for a whole year, that's actually pretty good. Okay, believe it or not, 56% sounds like a small percentage because it's far from 100. But actually, for a year, it's not bad. But I've seen much higher than this. Okay, and I'll get into that more, especially in more videos. I'm going to actually locate stocks, which is what I do. I use coding and what's called API to actually locate stocks that have some unusual, really high frequencies and change and all that, and I'll be sharing those with you. Okay, so that's basically what this does. All right, so I'm gonna just kind of leave the explanation there. The only other thing I might want to mention is you have the history you can look at here, like the largest amount it ever gained between these two, the most it ever lost between those two, the smallest loss it ever had between these two, and the smallest amount it ever gained between these two. But actually what I wanted to share with you in this video is another symbol that I just found. I think it's BTCM, and I want to share with you a gap that I found that is a pretty good gap. That is Tuesday's close compared to Wednesday's open. Okay, and what we see here now, the reason why this is very significant is because Tuesday close compared to Wednesday's open is a very short space of time. This is the end of Tuesday and then the beginning of Wednesday, basically, right? So that's like a very short time. However, the average percent change for the past year, 1.42%. Gain frequency, 55.77. That's pretty good. But what I want to look at, looking at a year when you're doing short term sometimes is a bit too much. You maybe want to cut that down to about, sorry, my number lock, it's not on. You want to cut that down to about 150 days in the past, which is about 100 and change trading days. So we can see what is going on with it more recently. And more recently, I see that this average has gotten even larger. So this means that the average has gotten larger with time. Now the average for the past 100 trading days, we have a 3.22% between these 2 points. 3%. And that's the percent change. And then the frequency, how often it gained, 67% of the time. And because I look at this kind of data a lot every day, I know that that's actually a large percentage, by the way. For to have a gain between 2 points that are close together, such as Tuesday's close and Wednesday's open, that's actually a large frequency. Okay? And when you look at the actual the gaps between these Tuesday closing prices and these Wednesdays, just even kind of browsing, you can see that there's a lot more green here than red. Okay, the positives come out green, the zeros mean that there was no change at all. Those are just flat out no change. Okay, and then you have the greens that are positive and you have the reds that are negative. But if you notice, zeros are okay. I haven't lost any money there if it's zero change. Right? Reds, right? That's some loss. But most of them are green, and there are only like 2 reds amongst all of these greens. Okay, and a few zeros in here as well. Okay, so that is actually somewhat unusual to have that relationship between Tuesday close and Wednesday open. And no, not every symbol you put is going to give you this. Okay, if you change the symbol, I can change it right now. You're going to get totally different results if I change that back to GIVO or something. Okay, you see the average percent change is minus 0.78, and look how small the gain frequency is. This is more commonly what you would get, only 23.81%. Okay, look at this. Look how much more losses are in here. Okay, so that is what you would normally expect for most of the stocks to give you. Okay, so it's significant when you put in BTCM, that ticker, the fact that it's giving you a 3% average percent change at a 67% frequency of going up in price between those 2 points. This is significant. This is not just coincidental. And when to find these, I actually scan and pull data and do calculations using code on thousands of tickers before I find one like this. It takes thousands. You have to go through thousands of them to find one like this that has this particular, that has a unusual tendency between these specific points like this, okay, that are close together. So the idea here is that typically, if I were to buy this around on Tuesday close, or even better, if I can buy it closer down to the low on Tuesday, that I would expect normally on Wednesday that it's going to open up a lot higher than it closes here on Tuesday. And so I'm going to make, have a good chance of making money. The question is, well, how different are they? Well, the average is 3%, but we can look at the actual numbers and we can see it for yourself. It's been 9, 1, 1. It varies, right? So, I mean, you don't really know, but you can see it's been as much as 12.82. This lets you know that it's been as much as 12.82. That's like the largest amount it's ever been. But it's not a guarantee that it's always going to go up. It can also go down. We see it's gone down a couple times. But what I see is that it hasn't ever gone down. The most it's ever gone down, the largest loss is minus 4%. This is good. I can tell you again, as I've scanned tons of these, it's not unusual for me to see like minus 30% or something like that, minus 20. So if your largest loss is minus 4, that's like nothing. That's really good. Okay, because trust me, these things can drop 20%, 30% in one day. Okay, penny stocks. All right, so that's basically it. That is really the main point of this video and what I wanted to show you. So you can even try this yourself. Please always remember there's inherent risk in trading. There's no guarantees, regardless of whether you are doing chart analysis or doing statistical analysis like I'm doing with data. There's no guarantee or ability to predict the future. This is only providing with a sense of what is typically happens. However, I have been able to make small successful trades based on this type of analysis, and so it generally works for me. But it can work for you, but you have to still be careful in how you do it and try to get as low a price as possible when you buy it. So if you want to try this with a comfortable amount of money that you can spare, you can try that, getting it around Tuesday close or lower. Actually, if you're not available at that time, you can just set to buy it lower. Okay. For instance, tomorrow is Tuesday. today's Monday. It's Monday night. So if I'm going to do this, which I probably will, I'm going to have to set a limit order. All right. I'm not signed in right now, but you're going to set a limit order. And when you do that, you're going to put a price, okay, that you want to buy it at. So what you could do is just set it to wherever it is right now, where it left off. Right. And you could just buy it there, for instance, So anyway, I'm not really getting into that part here in this video. If you want a copy of this Google Sheet, which can help you do this kinds of analysis, you can find a link in the description of this video to get a copy of this Google Sheet. And also, if there are any other links, do check them. And there might be something there about example tickers, because I'm going to be analyzing these and providing some tickers with patterns that I have already found for you that are strong, that I can give to you, and then you can use this Google Sheet, enter the ticker that I'm giving you, and then study these patterns for yourself, and then kind of decide what you want to do with them. Okay, so that is something that I might be providing. So if it's not there today, it might be there in another day, but just go ahead and get a copy of this Google Sheet. That also makes it possible for me to email you future updates on the sheet, as well as anything else that I'm doing, including what I just mentioned. And I'm Mr. Mark. This is Spreadsheets for Stocks, and I look forward to either hearing from you or seeing you on the channel. Take care.